Okay, all right. Today, the plan is to take a quick look at the charts as usual. Just a quick one today, see where we're at. Things kind of continue, interestingly, it played out a little bit like I drew the picture last time, and I will tell you that's just dumb luck. But it's a common pattern. When you break above a point of resistance like this, which I think this yellow area is, and see it acted like it here. We've been talking about this every week, so you can go back and if you haven't seen those. And if you're looking at this on YouTube, please don't forget to to subscribe, and we post these out there so you can see, and you'll see the old ones. We talked about this, but the idea here is that if you break above a point of resistance, it's not uncommon to rally a little bit and then come back to that, and now it becomes support. Is that what's happening? Well, so far, yes. Will the support hold? Well, I don't know. I mean, that's going to be a different question. It does look really interesting today, like it did, because we were down. You could see this long tail on this red bar here. I don't know if you can see it very well, but there's a long tail right here. We were down a lot. I mean, we're down $9 right now. We were down, I think, like 35 or something this morning. I don't remember, but it was quite a bit. And we've kind of rallied back in the last couple hours. So, it does seem like there's some support there. We'll see how it goes. We did have some highs that got very close to the 200-day moving average. Not an uncommon place to find a little bit of resistance. If we rally back up, we're probably going to see a little resistance around that 200-day moving average again. That would be my guess. The other thing I'm paying attention to, which I know that others are as well, I've seen some of the technical traders, is there is a sort of a trend line right here of these tops from here to here to here. And, we're in that zone as well, which is going to kind of coincide with the 200-day moving average. So, again, I would not be surprised to see some resistance in this, in kind of this area right here. I don't know. I'm not a huge fan of trend lines like this. Sometimes you see them line up like this, and it's interesting, and I watch them. I mostly watch them because other people are watching them, but there's no magic to it really. And you can get really fuzzy about how you draw these lines. And do you include the exact tops, or do you, if you were drawing them down here, would you include these long tails, or would you, just include the closing prices? And I've seen people draw all kinds of, fuzzy lines that they think makes sense, and it's only if they're really clear that enough people are looking at them that they will. But anyway, that seems to be how things are going at the moment. I talked about last week, we did have, again, some divergence on the new lows, which I think I can bring up here. Let me get rid of this for right now. So, we had this kind of double bottom right here, and we definitely had, less new lows. You can see a little bit of divergence there, which is, I think it was 3 or 4 weeks ago, I kind of went through several examples, and I talked to, again about it last week, is that, when you see that sort of pattern, it tends to coincide with when the market's bottoming. Is that the case here? I don't know for sure, but in order to go lower, you got to have lots of stocks going lower. And so what we're seeing is that out of all the thousands of stocks in the New York Stock Exchange, not so many of them are lower. So we're seeing less new lows, even at the same price, which means that we've got some that have gone further, or it's because of the weighting. Anyway, So, and what I mean by that is not all stocks are weighted equally in the S&P 500. I think we've talked about that before too. So anyway, so I kind of see a few bullish signs, as well as we did get some, our green dots, which means we don't have any. This doesn't mean bullishness. What it means is lack of bearishness. So when you see the green dots, what that means is we're not seeing a lot of unusual put activity, people buying insurance for their portfolios. We're not seeing high volumes of downward pressure, people selling and shorting a lot in large volume. So, that is also, tends to be a good sign. So right now, we're kind of, we'll watch it, but, it looks like we could be heading north, and the patterns here kind of look like it to me, but you never know. Anything can happen. I mean, sometimes we have these surprise days. Like last week when we talked, we had this huge green bar. This was, what was the low was 37.51. The high was 39.73. That's a 240 point swing. I'm sorry, 220 point swing, which is enormous for the S&P. So sometimes those just come out of nowhere. And as I said, this was right after the election, and I know that the market loves to have, a mixed Congress, which looks like we're going to have. And I think this was also a lot of, the uncertainty was taken out of things. And so, that tends to be to happen sometimes. What's interesting is the market moved really on news, and that happens from time to time. We saw the market move downward on the Jerome Powell meeting a few weeks ago. Same kind of thing. We were just doing fine, and he comes out and says a few words, and the market tanks. That was 140 points or something. So we do see those things, and I'll talk for a minute about that. But anyway, right now I'm not predicting anything, but I'm feeling a hint of bullishness, at least for the short term. Maybe a little bit of a rally, but hard to say. We'll see. We're down today, and we're going to, of course, trade according to our E.W.S signals.